G'day traders, Stacy Burke from Stacy Burke Trading. Today we're going to be going over using time in the London breakout session and for the US market session for trading the Forex market. So I'm going to go over a couple of examples today on how you can look at order flow around the London Open, but also using the middle point of the 24-hour trading session to look for keys in order flow and supply and demand in looking at to the US Open. So today we've just got the US pound up here, and just to give you a little bit of feedback here, the pink square is the Asian market high and low, the yellow square is the open of the London markets, the 2 a.m. New York Eastern Standard Time candle. So these 2 a.m. to 5 a.m. traditionally is sort of the largest time in terms of volume for trading the London market open, when a lot of that order flow comes into the market. And then the blue square and the overlap of the yellow and blue is the US Open overlap. So we'll just go back a couple days. I'm not trying to pick any particular market. I'm using the pound just as a generic example, and we'll just kind of scroll through and look at a couple of things. Now, before in some of the other videos you've heard me talk about order flow and just using that 2 a.m. candle to look for possible clues in terms of direction. You can see, just looking at some real simple price action high and low, how the market just pre-open drove up into supply. First hour of the London market, we opened up. Breakout traders, if you're on a shorter time frame, traders may have entered in somewhere in here, but breakout traders on the longer time frame may have entered the break of that low, the Asia low. And again, we saw the market trail down. Now, one of the key things that I always talk about is that between 2 a.m. and 5 a.m. New York Eastern Standard Time is that you'll often see a high or a low buying or selling extreme established for that session. Now, that doesn't mean that's not going to change into the New York market, but potentially what we may see is those two areas hold, or one of those areas hold as the extreme to see who's driving the market. Now, in this particular case, breakout traders may have entered in the low of that 2 a.m. candle. The market drove down. The market tried to go down lower. Traders, depending on how your strategy is, you may have exited somewhere in this range. But let's just say you hadn't traded that. You're in North America. You haven't gotten up in the middle of the night. One of the things that you want to keep an eye on, okay, is the 12 o'clock candle, which I just highlighted here. 12 o'clock, sorry, on my chart, which is the 6 a.m. candle New York. And what that is the midpoint for the 24-hour trading session. Now, this is just coming back to some of Stottlemyre stuff and Gann and using price and time. And now price, this time is 50% of the time of the 24-hour market. So this has some significance, as we'll see. That may be related to the order flow of the U.S. market coming into play. It may be institutional movement, the overlap of traders struggling for buying and selling areas. But we'll see this in the next few examples. And then what I encourage you to do is to go back, look at your own charts, depending on where you're trading, even if you're on a 5-minute chart, and we'll break this down in a second. But you can use these hourly charts and the time of day to really start to see excuse me, where some of the supply and demand levels are setting up. So in this particular case, as we go into the New York Open, we see that the market has potentially found demand beneath this level, somewhere in here. And if we scroll that across, we can possibly use that bull candle from the previous day's session. Depending on your level of risk, you may just use the one high and low as an example of where institutional volume is controlling that market. So we've got a high at 40.82 and a low at 40.35. So, again, traders may have established a position somewhere within that candle with their stop below that level. So they may have been buying up where these tails are occurring into demand. But at that 12 o'clock time frame, again, we said that the market potentially has found a high or a low in that first 3 hours. So as the market drives up into the New York session, if you're trading the New York session, you would be looking potentially for some resistance in this area, and again that 3 a.m. candle to hold potentially as a selling area. Now again, that not necessarily that extreme will hold, but that area, if you're selling up here, the 2 a.m. candle may be your limit order area. So you might be selling somewhere in this region here of this larger candle as soon as the market comes up into that zone. So again, we've got our 12 a.m. candle here. Sorry, I keep saying 12 a.m., but that's my time on my charts, but that's the 6 a.m. candle in New York. That's our halfway point. So you may be buying and selling somewhere in this range, but again, as it gets higher up into this upper portion, you want to be looking to possibly sell off as that 2 a.m. candle looks to potentially hold when we see these tails setting up. So if we go to the next day, just scroll across, and again we've got a couple of ways to look at this. You can look at Asia low, Asia high. We see the market break out in the London Open, and an inside bar forms. Now, if we come back to our 2 a.m. to 5 a.m. example of where one of those extremes may potentially hold for the session, we see that into the US Open, now we've definitely possibly got a high or a low setting up, and as the market starts to roll back upwards, we see that this lower area here under the 40-50 area looks to be holding as a low for the session. But if we look for our midday candle, it's right here. Okay, so if that's midpoint of the day, this might be midpoint of the move. Okay, we see that market roll over and into the US Open. As soon as that starts to move back in that upward direction, we now know that the market potentially will want to retest orders up into that level. Now we didn't quite get there, but we did see tails occur. As soon as we see those tails starting to show up, again, you might be looking to sell somewhere into that region as we get higher into where sellers stepped in previous. So again, just looking at if you're trading the US market, how to use some of that earlier order flow from the London Open to look to see where time may give you an indication of where that market is now starting to move after the midpoint of the day. So if we again go to the next day, we see the London Open set up on this first white candle, and a large pin bar occur. Now, so breakout traders may have looked to be trading the breakout of the pin bar, and then we see our midday set in. So we've got a very strong breakout market occur, very strong trending market. We've got our midpoint of the day. Now, for trend traders on the smaller time frame, this might have been a lot more evident on a 5-minute chart, but this is an excellent opportunity for people to trade the inside bar with low risk in a very strong market where this market broke out quite strongly. Obviously, there must have been some news released on that day, but midpoint of the day, possibly midpoint of the move, and we look, just with eyeballing that, we're looking at possibly a measured move for the session, pretty close. And again, trend traders would have followed that right up. So again, midpoint of the day, if you're just trading the US markets, you may have only squeaked out that last run up, but that's still, you're still looking at 50 pips. So not a bad trade, traders. And again, this is just using the pound as an example. There may have been other trades on other pairs. Again, just looking at price and time. So we see the order flow start right off the bat in the London Open. The next day, the first hour of the session, the market breaks out strongly, makes new highs, pulls back, doesn't quite get back into range, continues its run up. Now we go to our midpoint of the day. The market is starting to still moving higher, but it's made a higher high, but again, the market is closing within range of the previous hour. So we see new highs being made, but we're seeing the market consolidate back into range, and that's something you want to look for, because again, we see, obviously, without looking too far to the left, there's obviously been some supply occur up here and into the US market. We see a pullback on the first hour. Now, traders who were looking to maybe get back into the trend long would have looked to have traded the break higher, or maybe they've bought the close here. Now those traders are possibly at risk of being stopped out, and we see the market break out. So bears that have got in here are short. They've got their stop above that first hour. The market accelerates as those those bull stops have been picked off, and then it continues right down to the other side of the market to where it tests that original breakout from the previous day. So again, just looking at price and time, we saw that at 12 o'clock, which was midpoint of the day, after the London session broke out quite strongly, but we saw the market, although it was making new highs as we went into the US Open, we saw that the bulk of those last few hours of that London Open were closing in range. So the market was chewing up supply. It was obviously new sellers were entering the market above that area, and then we saw the market sell back down heavily. One more. So we see into the London Open, Asia started to already, we saw order flow coming in fairly early into the market. We see the first few hours of Asia sell lower. We're using up some supply. Market breaks to new lows, but on the midpoint of the day we see two-sided trading occur into the market. The market then trades north a bit more, but again, then we see that where the bodies are closing inside a range. Although we're making new highs, we're starting to see some supply tails come into the picture, and as the US market opens, we see a bit of volatility. We know there's sellers coming into the market by that longer tail. We see a lower high, lower low, and then sellers, of course, come back to the other side, seeking some liquidity down here. So hopefully that makes sense, traders. Again, looking at price and time. So if you're not trading London, you've got an opportunity to use the midpoint of the day to look for possibly where the London session has established a higher or low for the session, where we're now seeing evidence of a market that may continue on in a trend or consolidate and trade in a range. But you want to use time to see where the market's setting up its supply and demand levels. Go through your own charts. If it doesn't make sense, go through a few thousand of these. It'll help. Supply and demand, London order flow, US Open, midpoint of the day. Hopefully that helps, traders. I appreciate your feedback and your questions. I've had a few people emailing me and asking me for a bit more detail on that. Possibly in the next video we'll break that down. We'll use some 5-minute charts to show how those levels start to hold up, and how prop traders and institutions, where you can start to see where they're entering their orders in. Thanks for stopping by, traders. Stay disciplined, stay focused, keep working hard. It'll start to get clear, but keep your trading simple. Stick to your money management rules. Focus on constant improvement. Where do you want to be a year from now? That's the thing. Just keep getting better. You're going to make mistakes. Nobody's ever perfect. This is a game of inches, and it's always about being able to recognize when you're wrong, getting out. You're going to have small losses. When you get into a trend, let it run and pad that trade. Have a great day, traders. Hi, traders. It's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, The 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.